Well, the Bank of Canada will make its next interest rate decision tomorrow. Economists are speculating it will hold steady amid uncertainty of the U.S. trade war. CTV National News reporter Colton Praill joins us this morning with more on this. So, Colton, how could this interest rate decision affect the ongoing trade war?
It can't really. It's the trade war impacting the interest rate decision, as you just pointed out. This is really at a middle ground right now for the Bank of Canada. We've seen them hold it for the last, if this does happen on Wednesday, as we expect, it'll be 3 decisions that they've held the rate at about 2.75%. The trade war having a significant impact on this. Obviously, we're seeing the economic impacts primarily sectorally in Canada, and we have seen some sticky inflation, but there's been a relative strength to the economy in Canada. You know, it is weakening, sure, but there's been some persistence. You see that in the job numbers that came out last month, 83,000 jobs, the vast majority of those, over 70,000 part-time, but still the fact that you are seeing that sort of resilience in place gives reason to the Bank of Canada to hold those rates rather than lower them, because if you do lower them, you run into the risk of increasing inflation, and obviously that has been a concern, even though that headline inflation number is at about 1.9% last month, and that looks really nice. The core inflation rate underneath that is proving a little more challenging. It's at about 3.1%. It's actually increased slightly compared to last year's data. And so that gives a challenging decision for the Bank of Canada. And what we're seeing is the result of this trade war, the result of federal policies when it comes to upcoming investments. Obviously, those major projects are expected to be starting to be announced this fall. There's going to be a much more of an influx of federal spending. We're seeing some federal assistance in certain sectors like steel and auto. And so when you combine all of these things, a federal injunction or influx of cash, what you're seeing is the Bank of Canada likely saying it doesn't necessarily need to be the driver of fiscal policy so much. It doesn't need to respond to the uncertainty created by tariffs. It's happy to stay in that middle ground where it's not lowering it too much to boost fiscal spending or consumer spending, and it's not driving consumer spending down by keeping rates too high. Obviously, this can change if the tariff situation changes, and certainly come Friday, we might have a little more clarity. There's that risk of 35% tariffs from the United States. Any sort of deal that comes will change this discussion once more. But really, it's the September decision that I think most economists have their eyes on, because hopefully by that point, there will be a little more clarity on the trade front with the United States, and we know if there is some sort of persistence of these sectoral tariffs, that's going to be in place long term. That's when you're more likely to see a rate cut. At this point in time, the banks in Canada as well as the United States both looking like they're going to hold steady as things are still relatively uncertain, and they're not looking to rock the boat too much.
Okay. Colton, thank you.
Anytime.